a microfinance borrower or the lower economic strata, they fall sick. It has two problems. One, the person is not earning. Number two, there is expenditure on the, dealing with the health issue. Number two, for example, they do not have an assured pension scheme at the end. Whatever they, having lived largely on a subsistence basis, how do they take care of their post, life when they can't work? Earning life is over. So I think the ability to do all this is very important for overall well-being. So understanding, very, very technically, financial well-being, we will do budget your requirements, make the income for that, save, and have insurance products. That's the standard definition. But what are we doing in respect of this, and what should be done with respect to the microfinance customers is what we're trying to kind of address in this session. So what we will do is I'll stop that and start asking from each of the panelists. The question I would want to kind of ask this to each of you. So from the perspective of the organizational stakeholders, each of you represent, can you use a brief outline of the steps, policies, products that have been taken, implemented, or so that they have policies, product insurance, and to improve the well-being of the customers, which are anything that being without it. Go there.
Thank you, sir. First of all, I am extremely grateful to Sa-Dhan for arranging a very timely session on this financial security, particularly to the poor. And I am thankful to Vishwanathan ji, who has got so much of a depth as a regulator, and also my co-panelists. With regard to this thing entire, because now we were through this entire microfinance journey since beginning. And if I really look into it, we started with nationalization to the setting of RRPs to the cooperatives, but at the same time nothing had happened. Now a new product has to come for addressing the credit needs, then maybe the deposit needs, and also the insurance, and also the transfer needs of the people. So that is where this entire SHG program has been designed. And with the blessings of RBI, NABARD has spearheaded the entire movement. And quite a lot of products, because depending on the necessity during that period, actually the products have come into vogue. So now, if you look into this one because I wrote one book on microfinance and SHGs for NABARD, if I really look into the entire thing, that today's lingo, it's called the startup capital. Now, that with 10 lakh rupees of startup capital, today the industry is close to around 6 trillion rupees. Which has probably no other concept might have got such kind of a thing. And this has created quite a lot of things. Now actually that they are able to address many of the needs of the people. But at the same time, the institutions have undergone a change. The ethos have undergone a change. The way the credit is dispensed has undergone a change. And quite a lot of changes that are happening in the ambience are being incorporated into the system. Now, at one point of a time, 2 rupees saving, actually that itself was a big product, 2 rupees a day saving, and subsequently giving 1:1 to 1:4. Now today when the MFIs have come onto the picture, now they are looking into the credit worthiness based on maybe their CIBIL score or maybe some kind of a score. And straight away the first loan itself is around 40,000, 50,000 depending on this thing. And subsequently the graduation, which NABARD was advocating as a kind of policy, that once these poor people are brought into the net of this inclusion and taking them to the banking level, they should be allowed to graduate to the next higher level. So now that making them as an entrepreneurs and all those things. Today actually that is also happening. But at the same time, there are few issues. Right now actually there is quite a lot of stress has cropped up in the last 2 quarters. In this one that we will discuss in the next few questions. But definitely today this industry is akin to the banking. Addressing the needs of the poor, it got every kind of a product which they want. And with the bringing the PM JDY, PM Tandon Yojana, now their deposit needs part also has been taken care in a very big way. But at the same time, the poor remain poor, and their needs are always emergent, and really we need to devise every time a new product which caters to their needs of that time. And when they are not able to meet the both ends meet, that is where actually both the MFIs and the institutions have to really come forward with another product. And at the same time, if you look into the security issues, really what kind of a security? Now there are so many securities everybody is talking about. But today I will say that having seen the industry from a much close angle, and also right now also looking into the industry from, because by being in few other places, today the greatest security is apart from the personal securities and other things. Actually, the cyber security is the one which these MFI clients also have to be made aware of it, because you just look into any of the TV visuals. Every day one or the other fellow commits suicide. Most of them are from the poor category, because that rummy wala gaya falana, then something is put into this, and this fellow borrows money from somewhere else. So now the cyber fraud, cyber security, then environmental security, because of the climate refugees, in case if you have to call. Today the poorest are the poor, or maybe the reasonably well off also are becoming the climate refugees. Now the new products have to come to cater to this climate changing needs, and also really how the new products have to be designed in such a way that they will take care of these vagaries of the nature, and the poor are not thrown back into the poverty again. So that is the one. And the third one is with regard to the insurance. Quite a lot of insurance products have been devised, but still the penetration is very low. Now wherever they are taking on by force, probably sometimes they are taking the insurance, but otherwise the conviction whether they are taking the insurance or not is still a matter of debate. So that is where I feel that today products are not an issue, and designing a product is also not a thing. But thing is whether the product is affordable, and whether the product is meeting the requirements of these people, whether the product is meeting the changing dynamics in the entire ecosystem. These are the things which we may have to look into it much more closely.
I think you did 50% of my work by kind of bringing the risk perspective into the scenario. So just two aspects which you had touched upon in terms of policy, for example. So if we look back for the micro segment, the policy from an insurance framework is something which is almost 10 years old. So if you want to really may call it a micro segment product, which was probably a luxurious requirement at that time. Today, the entire dynamics of that risk, the way we are quantifying that risk, as rightly said, that has gone up 10 times, but the product has not changed. So what used to be something like a 2 lakh sum insured per life at that time, today that value remains capped at 2 lakhs from a policy perspective. What are we doing outside the policy framework? There is a lot that is being done outside the policy framework, largely on the life side, not on the general side. So here I just like to bifurcate the two. As a country, we are just at about 4% GDP penetration on insurance. Largely 75 to 76% is coming out of life insurance. Why life insurance? Because financial institutions find it extremely comfortable. There is no hitch there. You don't have to justify why you're covering that insurance product, because all you tell the borrower is that every risk is covered. It's an all risk policy. Anything happens to your life for any reason, we will take care of the residual loan, right? So that's how it's sold. And the price or the ticket size of that product is slightly high as well. When it comes to actual protection of the borrower when they are living, so you rightly said, the assets that need to be protected, their own illnesses that need to be protected while they are living, and the last aspect in terms of the climate impact that creates on their livelihood. These are certain things which are the need of the hour. These are certain things that are evolving now. And as an insurance industry, on the general insurance side is which is important that we have started taking steps in that direction to customize and create products that actually meet their requirement. So policy, I think from here on, these needs will definitely put a pressure on the ecosystem now to relook at the policies. The second aspect is in terms of, so since yesterday we've been hearing about financial inclusion, a lot of subsidies being going out. Nowhere has anybody spoken about subsidies being going out for risk inclusion. Why do we call it insurance inclusion? Why can't we call it risk inclusion? There are so many stages that are there during the life cycle of these borrowers. And not only micro segment borrowers. 50,000 borrower today, we are talking about a 1 lakh income. 1 lakh income means their sum at risk must be definitely 10 times the value. Right? So these are certain aspects with which I think we are struggling with, and policies have definitely been there in the fray. That innovation is something which will now start happening more rapidly from an insurance perspective.
Thank you, Priya. First of all, I would like to thank Sa-Dhan for giving me this opportunity to be present here. It's a great privilege to be with stalwarts like Mr. Vishwanathan and Dr. Chintala, as also with Priya and Mukul. I represent pensions coming from NPS Trust. So pension is something which everybody possibly thinks about last, because retirement after 30 years is a distant horizon. And I would have to sort of give up a current need to invest for something in the distant future. So that's one of the biggest challenges which the pension regulator, the government, is facing when it comes to penetration of pension products. The second thing is pension, thought on pension or on the elderly population started about 20 years back in India when 2003 PFRDA was set up. And the pension architecture in India takes into account the fact that a large proportion of the elderly are poor, or they have very low incomes, they are from the informal sector with much less financial literacy, let alone digital literacy. And therefore, with a lot of thought, the pension architecture under NPS is unbundled. So when I say it is unbundled, it means there is NPS Trust which sort of monitors all the other intermediaries. You have the POPs or the nodal officers who sort of were the front-facing people. They collect the applications, something like the BCs. You have the trustee bank, you have a custodian bank which take care of the fund flow. The investment is done by the pension fund managers, and the CRAs at the back office, they sort of maintain all the data. And the data sharing is limited, restricted across intermediaries. So this was done with the intention to keep subscriber data tight, to prevent frauds, to have economies of scale. So it's a very unique pension architecture that we see in India, which is not there across the world. The second thing is, because of this informality of the population that we are dealing with, the pension fees that are charged to the subscribers are the lowest in the world. There is hardly any cost of onboarding. The exit and entry are very easy. So there's a lot of flexibility, portability in the regulations when it comes to the products that have been designed. Before I step into the actual regulations, I will give some context as to what is the society that we are dealing with. So the first goal under Viksit Bharat is that India has to be a pension society by 2047, which means every individual should have a pension account. Now, if I look at that in view of the fact that about 1 out of 10 people in 2022 were above 60 years of age, which means 10% of the population in 2022 were above 60 years. That is going to become about 15% by 2036. And by 2050, 1 out of every 5 people will be beyond 60. Now, that means that there is an urgent need for the regulators, the CBOs, the institutions to look at onboarding of people right from now, including people from the microfinance households. Some of the products are which have been designed looking at the low-income households and which have really got traction. We have the Atal Pension Yojana, which is a Ministry of Finance initiative, and it is regulated by PFRDA. It's a very, very simple scheme where there is an assured pension of 1,000 or multiples of 1,000, 2,000, 3,000, 4,000, 5,000. And the amount that goes per month from a subscriber is just 42 rupees if you want a pension of 1,000 per month. So pension of 1,000 per month, you get 42 rupees plus the corpus comes back. So the corpus is invested and he gets something like 1.7 lakh at the end of, at 16 if he starts investing at 18. So it's a very flexible product for the unorganized sector. You just have to be a citizen of India. You are not a taxpayer. You just need to have the KYC and you can onboard. Another product which is there for informal sector is the all citizen model under NPS. That's also very cost effective, very flexible. And we have seen that during COVID, what was feared is that most of the APY account holders or the NPS account holders would stop contributing. But the fact that while the contribution stopped for a few months, they started again after the COVID period is important thing to note. And during COVID, these rules were made flexible so that the microfinance borrowers or people in that category would remain within the fold. The third important thing, so when it comes to products, we have the APY, we have the NPS All Citizens model. Very recently, there is a scheme which has been launched which is called the NPS Vatsalya, which means, it's something like catch them young. So any child up to 18 years of age can have a pension account which is opened by the guardian. And once he reaches 18, it becomes a normal NPS account. So the minimum contribution for any of the pension products is very, very low. Like I said, for APY it is just 42 rupees and for other pension schemes minimum 1,000 rupees per annum. So that's as far as the products are concerned. Also to increase awareness, 1st October is treated as Pension Day. And that's because the United Nations has declared 1st October as the Day of International Aging. So a lot of awareness creation happens around the need to create pension awareness. So these are some of the few initiatives which have been taken in the pension sector.
Thank you, Suparna. Let me first thank Sa-Dhan for inviting me to become part of this panel. Let me thank Vishwanathan ji who has raised this first question, how we have implemented, introduced processes, products, steps taken, policies for enhancing the economic well-being. Sir, as we are a not-for-profit microfinance institution as a Section 8 company, and we have also been registered as NBFC MFI to clear the doubts of the audience. We started microfinance from Eastern UP in 1997-98, and there was no microfinance happening, neither JLG model. We hadn't heard of or not even SHG model so far as my knowledge goes. And we were the first MFI to provide first microfinance loan of 500 rupees. So it started from there. So it was 500 rupees to 2000 rupees. So being a not-for-profit, poverty-focused MFI, and we have our program only and exclusively for rural poor women. So in terms of what are the steps we have undertaken and introduced as a policy, as a strategy, first not to allow that non-poors enter our program. So we have our own housing index whereby we try to assess the poverty level of a target women, rural women, in terms of her housing condition. What is the height of the wall of the house? What is the composition of the roof of the house, material used in the construction of the roof and all? What is the whether household owns a large farm animal or not? So for example, if household owned a large farm animal, she was not allowed to enter because she was not supposed to. Okay. And similarly, if she owned more than 2 acres of irrigated land, Okay, she was not allowed. So we wanted to ensure that only landless laborers and marginal farmers enter into our program. And they are women members. Okay, and we used to form JLG and give loans. Since then, since we ensured that only those who are BPL or who are poor join our program, and since the very objective of our microfinance program has been helping these poor using microfinance loans as a stepping stone to start their livelihood activity. It may have been the new livelihood activity, it may have been an existing livelihood. As all of us know, that poverty is a function of lack of employment opportunity, lack of capital, lack of education and skill. Okay. If all these three things are taken away from anybody, the person himself will become poor. If it is taken away. Okay, so your capital is taken away, your knowledge is taken away, skill is taken away, okay, and you are left alone. So what we ensured that we provided debt capital to these women to start their livelihood activities, okay, and use these activities, use these loans as a stepping stone. So once they settled an existing loan, then the cycle-wise loans were given. But very soon we realized, in next coming 10 years or so, that these loans were not enough. Okay. So we introduced other products also. So for example, in terms of credit products, we introduced emergency loans. We introduced what we call flexi loans. All these emergency loans was meant to help these women to meet any life cycle shocks or any natural calamities which many of these women used to face during monsoon season. The village would get flooded and all of that. And all these flexi loan, this emergency loan was actually subsidized. It was priced, interest rates was heavily subsidized because it was a supporting loan and it had a moratorium period of 12 weeks. Okay, so that actually they can recover from the shock. Okay, and this loan becomes a supplement. Okay, during those need of ours. Then we introduced flexi loans because we came to know that, and these women were complaining that we had no choice but to borrow and go to other MFIs. Okay, if you give loan for 2 years or 1 year and then don't give next loan, and we have a seasonal income generating opportunity. Okay, maybe during Navratra, maybe during Diwali, Raksha Bandhan, all these festivals were there. So we introduced this flexi loan for their working capital need, and if they wanted to start another livelihood activity in the family as children were going. As they were growing, these children, so we introduced that. And in addition to, then further, they were also going to other MFIs and other NBFCs if we were not supporting them. So we introduced further loan, these flexi loan products as loan for their consumption activities. So finally, by 2015-16, we had a bunch of credit products taking care of all the needs of women. But there was one rider. They were required to undertake that they would not borrow from any other financial institution, okay, or MFI, unless they were getting a better deal from Cashpor. And Cashpor has been continuously offering them microcredit products, all our loan products, at a rate cheaper than being offered by other MFIs in our operation. So currently, for example, we are charging only 17.5% interest rate on our loans. Okay. We are on emergency loans, it's 15%. Okay. So we have, and then we introduced women empowerment loans. So this was meant for enabling them to buy their own smartphones. Okay. And this was again priced at just 14%, so that they could buy a smartphone. Okay. And we can work on them so that they become literate digitally and use smartphones to make their repayments. We introduced other, and we also realized that only microfinance is not sufficient enough. Okay? We needed to bring in more intervention, and we started health program, and we started setting up, because the health was being talked about and the illnesses were being talked about. So we worked on, we wanted to create an ecosystem So we started a whole program, a health program, which comprises of three dimensions. One is preventive healthcare, where we have a team of 3,000 community health facilitators. All these are women. They come from our borrowing community only, and they actually go and impart health education lessons, okay, or modules on a monthly basis in each of these group meetings. Okay, so they cover all these vector-borne diseases, water-borne diseases, and cleanliness, sanitation, everything they cover, family planning, the diseases those affect our children, okay, the diseases those affect women or adolescent girls, all of that. So we worked on a preventive health care, but very soon we realized still there were illnesses. Then how to ensure that they are not getting victimized in the hands of the unscrupulous medical practitioners or quacks operating in rural areas. So we introduced the concept of physical fortnightly health clinics. Very soon we realized that doctors were not made, professionally qualified doctors were not available, MBBS or MD. So we converted these fortnightly clinics around COVID times into e-clinics. And in these e-clinics, these women can get treated if they have general illnesses. And they could get 5 days medicine free. And then on top of that, still if some hospitalization is required, we introduced hospitals with partnership with the insurance companies. So we tried to create the entire ecosystem so that their livelihood, which is getting affected when they are hospitalized, get compensated from insurance. Or when there are illnesses, their medical expenses are minimum. In addition to that, we also introduced tuition centers. We actually identified that these women were aspiring that their children get better education, and they were being sent to private tutors, private schools, where the quality of education was also not up to the mark, okay, when we carried out the field survey. And we introduced, currently we have 2,500 tuition centers which work before the school time or after the school time. We have digital learning centers for the children so that their expenses on the education of their children can get minimized. So all these initiatives, there are so many things to share, but given the time constraints, I would like to say, and then I would like to close here, but I would also like to add one more point in a minute, that we are also measuring impact of our microfinance health and education program by way of annual sample survey, where the random samples is taken of close to 15,000 women by our internal audit department independently, which reports to chairman of audit committee, who is the independent director, and submits how our products and services are enhancing the economic well-being of these women. Okay, thank you.
Thank you, actually. Sorry, we have to go. Next question I'm going to start with you. So you are talking me. More because I want to change the sequence and also next to you. This RBI has recently voted to kind of harmonize the regulatory framework, made it more institution agnostic, regarding microfinance. There are very clear regulations there which talks about how do you measure income, that we report to the Credit Information Bureau. Third, there's very clear limit on that the total repayment obligation should not exceed 50% of the income. Do you still see any increase in household debt happening? Is there an increased leverage of the households? Because I think while we talk of all other measures of well-being, non-repayment of loan becomes as a major starting point of downward trend in the well-being. So do you see that as is there a problem that you see, or is it regulatory? I don't see regulatory because they prescribed a minimum limit. What do you think is happening because of that? Is there a concern in terms of leverage in the household because of that? You want to answer that question? Okay, can take some rest. We will begin to ask you.
So a fantastic question, sir. It is most contemporary. Today it's happening. Now, as I was sharing informally, today again the microfinance is what it was somewhere in 90s. 90s also the same amount of uncertainties, same amount of leasing, same amount of things were happening. Now today, maybe over a period of time, in the past maybe 35, 36 years, quite a lot of a change had happened in the microfinance sector. All the poor have been included. They were brought into the net for the credit and maybe so many other kinds of things. And at the same time, the SHG program, which is basically a bank-led program, cannot charge usurious rates because that 2 trillion or 2 lakh crores going from the SHG banking program is still being served at around 10% to customers. So it's good. But why the people are going to the same SHG member is going to the MFS by paying the higher interest rate? The thing is that aspirations are going up so fast. In 1980s or maybe till liberalization, our GDP was around $500 billion. Today it is almost close to $3.5 trillion. So now everywhere the money circulation has gone up, the aspiration has gone up, and the Bharat and India actually aspiration level has become the same. Earlier at one point of time the rural people's aspirations were much lower than the urban people. Now going by that kind of a thing, actually people are willing to borrow more and do the things because the money circulation has also gone up. But now the thing is harmonization. Really now this is the basic thing which now RBI is talking about. Definitely I feel because now I crunch a lot of data post-retirement because we have very little work, so I do quite a lot of data crunching. So when I do it actually that if you have maybe around 150 MFIs or so in the country, like the charges they make, maybe the interest rate charging from the lowest is maybe NABARD is somewhere around 16% to 35% or something. So now actually if you look into that 35%, there is no difference between the Sa-Dhan movie and the present day. Both are the same because when somebody is taking 1 lakh rupees, that fellow within 3 years he has to pay almost 1 more lakh, and now imagine really how much of a burden it is. But at the same time, why actually people are not much bothered? Because of a little bit of a kind of a policy lacuna that is there within the system that is making people to borrow at that higher rates. Because now the money they are repaying is not coming out of their activity. Money they are repaying is coming out of the loan from some other activity. And this kind of a thing has happened because when I was reviewing the whole of this thing while writing the book, actually we found when the Tandon was introduced and the job entity was put into the picture, Aadhaar was made as the basic identity document for the KYC of the MFA beneficiaries also. Likewise now if you go for the hotel also they are asking Aadhaar. But thing is now this is the one. But somehow in between there was some kind of a change. I don't know it is because of the pressure from the industry or from anywhere. Now the voter ID card is taken as the KYC document. Now I have seen actually that one single person is having 4 or 5 KYCs done with a different voter IDs done in different locations. So now they are taking multiple loans from everyone. Now today that why the harmonization RBI has to come so strongly is because the person is unmindful as to how much he is paying. He is borrowing at 20% from somebody, 30% from somebody, because so long as that rotation is happening, he is least bothered as to who is giving money and how the money is going into the system. Now, with the kind of a heat that has been generated, probably RBI regulator, I can say that it is a real timely step. They say that why at all, actually there should be so much of it, because when guardrails were put and so many restrictions were put, not more than 4 people should give the loan. But I could see, because morning I was seeing a data, there are some places in some states, 10 institutions are lent to the same beneficiary. Now imagine, when 4 is the threshold, 10 means actually really this man cannot even. Now, his household income is not more than 3 lakh rupees, and there itself actually there is a lot of inaccuracies are there in computing, because anywhere you ask, we say that actually we do as per our kind of a thing. So now actually that is also not. So now, why the harmonization RBI is insisting in? At one point of a time, all the MFIs or for that matter anybody has to charge an interest which is reasonable and which is not usurious. So now, I didn't know, one of the recommendations from this conference, yesterday I was seeing in the paper, they say that the return on asset should not be more than 4%. Actually, that kind of a resolution has to be done. Actually, this is a matter for the policy input to the RBI and maybe NABARD and everyone. Actually, that maybe 4%, 5% or 6%, they should be reasonable. Otherwise, I was just sharing with Vishwanathan. I have seen one of the MFIs have got 18% of the ROA. Now imagine in case if 18% is the ROA, how much actually they may be charging because by adding all the things, because there is a formula for doing all the things. That means actually the customer must be paying not less than 30-35%. And whether it is a compounding or not, which will. So now, if this is going to add substantial stress to the poor. And the other thing actually, why actually now this thing is happening right now. In the last 2 quarters, actually, just go through the data. Last 2 quarters were miserable for most of the institutions. Because the first thing was the election plus, that's what everybody says. The second is the very high heat and maybe the cyclones and floods and all. Whatever be the reason. Now that cycle has stopped for many. Now that is adding to the stress of the recovery. Now today you just go to the industry wise. Many of the people, their recovery has maybe is coming down from 99.6% to around 94%, 90%. If an MFI is having 94% recovery, 6% on AUM of even somebody is having 10,000 crores. I think it is substantial kind of a provisions which they have to make, which is going to make the things very difficult for the people. So now a kind of a policy input has to come from the organization. It is the right time, like Malegaon committee has come. Because Malegaon committee is the product of this kind of a rapacious lending done between 2004 to 2010 when the MFS just came up and they started doing the things. And that had created a crisis and they say that not more than this kind of a percentage. But now RBI has relaxed and now actually RBI probably may have to go back and look into the policy picture as to really how the interest rate, maximum interest rate to be fixed. They should give a formula so that actually that industry also will comply with it. And the other one is that now when compared to the previous years, now RBI has become very vigilant and their inspections are very incisive. And they are really giving quite a lot of input for course correction and also sometimes political penalties. It's going to bring a kind of a reasonable semblance to the system that they are working for the poor. Because sometime back we were telling, microfinance is banking with the poor or banking on the poor. Now actually right now it is happening banking on the poor. Actually that policy, that paradigm has to be shifted. We should work banking for the poor and banking with the poor so that actually they are
interesting response. Do you see, for example, I think Mr. Mukul, you are actually lending to on this. So, how do you see this? I mean, how do you see this getting implemented? For example, I think the records are very clear. It says this is the process for assessing income. Many changes should be updated to the Credit Information Bureau. Measurement of repayment capacity, limit on how much is the service charge, I mean, repayment services quantum is there. But how do you see at the ground, how do you see this getting implemented? And I think the problem which Dr. Chintala raised is also important, is that we have now today multiple officially valid documents by entity. I can tell you only reason that was up to there was a Supreme Court judgment which barred Aadhaar as the sole OBD. So they said Aadhaar can be used only where you are having an account for getting government benefit transfers. All other things can be with any other OBD. So that became it's a judicial pronouncement, so that the regulators have to do it. But how do you control? Because today, I think the world today in India, I think across the world, setting is that people are more ready to borrow. The past, borrowing was taboo. Today is no more a case, right? So how do you control risk? Because I think, as I said, the well-being, downward cascading of well-being is going to be much faster and in a larger quantum. So how do you look at that?
It's not a new phenomenon on the arena, the multiple lending, over-indebtedness. It had actually come back post-AP crisis in the years after that, when resumption of funding had started happening in the sector from 2012-13 or 13-14. And at that point of time, we had realized, by 2015, we had realized that many MFIs from other parts of the country had actually started entering into Eastern UP and Bihar, where we were primarily operating. Currently, we are operating in 5 districts, have more than 1.2 million BPL women as our rural BPL women as our members. Okay, when they joined our program, they were BPL. So that's why we call them BPL. Okay. So, but we realized that they were all coming to our areas, and there was poaching of staff, there was increased incidences of multiple borrowing. In fact, that led to further, we took it as our success. Because when we started, there was no microfinance. In fact, I hadn't heard of what exactly microfinance is. It was our founder, Professor David Gibbons, who introduced us to the field of microfinance. So, in 1999. So, since then, now, I call it deregulation of microfinance sector. Not only harmonization, rather deregulation of the microfinance sector. Regulation by the RBI, because interest rate caps, margin caps were all done away with. Okay. Income limits were increased. I remember I had, as a part of delegation, made a representation before the Malegam committee, and it was being talked about 60,000 rupees annual household income initially, and why was it so low? And it was, some comment was made by Chakravarti Sahab, I can't quote it here. Okay. But now, when with the inflation, income limit has been increased to 3 lakh, but the core is how are we measuring that income? Because there are no documentary records available. So you have to go and conduct an interview. We in 2015-16 had actually moved from the general methodology of doing microfinance, taking a proposal in the group meetings. We had actually diverted and we had introduced that we would not lend to those who would be borrowing from other MFIs. Okay. And we started using this as a tool. So, and second thing, because we had introduced additional credit products, we had increased our loan sizes so that we could satisfy their full credit need, okay, which were valid for us to satisfy them within RBI regulation, okay. And then what we did was, we not only assessed their credit need for the current year, but next 3 years. And there was an exchange of undertaking that you would satisfy your credit need, you don't have to borrow from other, okay. And we actually focused on satisfying their credit need rather than increasing our number of borrowers, beneficiaries, increasing outreach, okay. Third thing we did was, we decided that we would go to each household, sit with the member, conduct all the household members, conduct a thorough interview. It can go up to 20 to 30 minutes, and do the need assessment, repayment capacity assessment, talk to neighbors. Okay, so we started that well before the new way of doing household income assessment was introduced by RBI. To prevent indebtedness, we also, so what actually, Vishwanathan sir, what you have stated, there is no doubt that every district has a presence of 25 to 50 MFIs, wherever we are operating. They are increasing. That is also success of microfinance, that MFIs have reached to villages. Because as per our expansion policy, we used to look for those blocks where there were no MFIs present. And in 2022, when we had identified regions in Odisha, Eastern UP, Bihar and Jharkhand that we would cover, expand into these states, I could hardly find a block where there were no MFIs present. There were always 1, 2, 3 MFIs present. So the access to credit has been there, but whether access to affordable credit, as Chintala Sahab has mentioned, has been there or not is really the moot question. And I think the success of microfinance lies in making this credit affordable, and prevalence of post KYC document is again another big thing. I think we need to, for example, we in Cashpor have made it compulsory that certain types of KYC documents which we cannot verify by reaching out to the issuing agency or issuing department of the government, okay, we won't take that. So we can, and we mentioned that we would take only so and so KYC, 2 KYC documents, so that the credit bureau inquiry is perfect. These are the steps which we have taken and MFIs have to take, and we already have. So 70% of our clients have been exclusively borrowing from Cashpor. Another 25% have one loan from other MFI. Rest 5% we on a quarterly basis hotlisted. That is why I would like to mention here that despite the fact that the repayment rates have come down, as Chintala have mentioned, from 99.6% to 94%. But if we do things right, we can still have a better repayment rate. Cashpor currently has a repayment rate of 99.3%. Our 30 plus days portfolio at risk is 0.7%. And we are worried because it used to be 0.4% 6 months ago or 1 year ago. So for us it is itself a serious thing. Okay. And we have taken all the steps timely, so that actually do not participate in this battle of very aggressive lending.
Thank you. So I want to give, I'm watching the clock, I'm very particular about it. We have another 14 minutes all to. So just ask a couple of questions to each of you and then needs. So, financial well-being, Priya, requires insurance products, okay? Now, my view is that the first port of call where an inclusive finance client goes is an MFI or a bank will lend for credit. And that's when they start generating income, they want to take care of their health, etc. So how do you leverage an MFI insurance or an MFI insurance and a bank relationship to actually make sure that these borrowers take those products which are important for their well-being?
That's a kind of sticky question for us in the general insurance space. See, primarily, like all of us know that the products that the MFI is currently providing is a full product, number one. We spoke about customized products starting at 16%, lowest going up to 35%. Now, typically what happens for us as a challenge is the moment, so we face the first hurdle right at the entity level. So an MFI partner saying that, look, my borrower is averaging at somewhere around 26-28%. Let me cap it at that 24 to 26%. And if I am already charging that much, and mind you, that fund is being probably, taken at about 12 to 18% range, but repackaged at about 24-26%. However, if you need to protect their life, if you need to protect their health, you need to protect their well-being, you need to protect their assets, the livestock, these are all areas which they are dependent on for their livelihood, right? And of course their well-being. There, the cost of even paying something like 1 to 2% more becomes a hurdle. So that is where the first challenge for us starts as a general insurer. So what does one customize at that level? That's one question that we face. It's an ongoing hurdle for us. What do we face? Secondly, like Mukul rightly spoke about, that there is a gamut of products that you actually give out to the MFI customer. Where does insurance feature there? In terms of risk, it's the highest. The exposure, it's the highest, right? probably your, from an insurance perspective, the understanding would be that yes, wellness is very important. To prevent the risk from happening is very important. But what happens post facto when they are actually losing their livelihood, when they are actually impacted with a lot of, so there is a lot of changing climate situations which are actually hindering them from going out for their earning, their bread and butter. Even for that product, to pay something like a 2 to 3% becomes a hurdle. So, going back, circling back to the question that you asked, I mean, I had to set this context in terms of why, because many a time we also get faced with questions as to why is insurance industry unable to reach there directly? Why are we unable to reach there? 3 issues. Mindset issues. The second thing is the cost of taking that product, which is probably 2 to 300 rupees is all we can charge just to create that blockage. So Suparna spoke starting at 42 rupees. We can even start at 50 rupees. But the point is that 50 rupees actually taking care of the risk? COVID time, we saw that 1 lakh of health insurance was a very big thing. In rural areas, it was a very big thing. We used to charge something around about 800 to 900 rupees to give them a holistic cover for 1 lakh. In COVID, we actually saw that 1 lakh burnt out even in rural areas in a matter of 3 to 4 days. So your average, used to be 1 lakh. In a span of 3 years, that has moved to an average of 3 lakh. 3 lakh also today is very less because the government has come out with the Ayushman Bharat scheme now capping it at 5 lakhs. So, well-being is something that I think it starts with the capacity building initiatives which actually the MFIs really need to start doing. If they understand that 26, 28, 30, 35% needs to necessarily have a component of risk factored in that. Risk to the borrower in terms of their livelihood or their life at stake. I think that is where it's going to be a starting point for insurance to come in, because this is an activity that is already happening on ground. So I would kind of rest my case there. From there onwards, I think the second point, which is also extremely important, is what the insurance regulator has taken an initiative now to come out with a product called Bima Vistar. It is due to be launched in a span of, let's say, 1 or 2 months. There, what we are attempting to do is also as an industry, put the life element, the non-life element, as well as the asset element as a combo product. And that is expected to be a game changer product. Like we spoke about every district having 15 to 20 MFIs exposed themselves. The mandate for the insurance industry would also be to go down to grassroots level. You have to go up to Gram Panchayat level and try to mobilize that product. And I guess that is where really wide-scale capacity building will start to happen. As an organization, we are an SBI entity. We've already started implementing a lot of initiatives at grassroots level. We've tried to take the bank's support and conduct a lot of activities, wellness activities. Camps are being conducted, awareness activities are being conducted. So even before the product is yet to be launched, I think the awareness is something which is the primary target for us.
Thank you. That was a very elaborate response. Ms. Suparna, it's somewhat kind of related to the question asked Ms. Priya, which is that you have those pension schemes, which are Ashok benefit schemes, as you call it. How much of them are coming from MFI clients? So do you have some kind of a data? Number one, maybe those who are bank clients and those who are MFI clients, number one. And how do you push the MFI clients? Given the problem that is it's a bigger hurdle to ask them to put a pension scheme, but the benefit accrues them after 30 years or so. What kind of relationship and arrangements that you want to have with MFIs? I know there are regulatory hurdles, but how do you want to push that? Because I think educating those clients and making them come into the pension number, I think very important as part of the overall safety net and well-being. How do you do that? No, question was, do you have some idea of how many MFI accounts, who are not bank clients, are there into the National Pension schemes, and they will be able to expand their coverage through MFI relationships?
So that's a good question. So we, at the outset, let me tell you that as far as the NPS assets are concerned, that is all the schemes regulated by PFRDA. Right now, we have about 9 crore borrowers, little less than 9 crore borrowers, of which 6 crore are APY borrowers. So we can say more or less that the APY borrowers would sort of correspond with the low-income generation borrowers. We don't have a breakup, we don't maintain that kind of breakup as to how many are linked to MFIs, because that data, this thing is not there. But 6 crore being APY borrowers, and the total AUM is about 13 trillion, the NPS assets. If it comes to the GDP, about 4% of GDP is covered by the NPS schemes. Overall, if you take all the pension schemes by various ministries and entities, EPFO and LIC and all, it's around 16% of GDP, far less than there in corresponding countries. So now if I give some alternate data, I can tell you that about in the 18 to 25 year enrollment, 96% are APY. So and that APY enrollment is going up at 9% per annum, which is for the last 3 years, which is again, which means that something is pulling the people there. The growth in rural areas is higher in the non-metro cities and in the rural areas. So overall, the growth is higher than in urban areas. So I can give some proxy data, but we do not have that kind of the data that you're speaking, but maybe we can tag the APY with that. Now, that's the first part. The second part that you were saying is how do we make the tie-up with the MFIs. So in one of the earlier schemes, the MFIs were sort of allowed to become POPs in the Swavlamban scheme, but that scheme is no longer there. And now, as per the regulation, the MFIs cannot become POPs, but they can become agents of banks. And then the regulator leaves it to the banks and the MFIs to have the arrangement for fee sharing, and the fee sharing is pretty okay. It's something like 90 to 120 rupees per account. And some of the public sector banks, because there is a target which is given by DFS, something like number of at least 20 accounts per commercial banks and about 50 accounts, APY accounts for each bank branch of an RRB and a commercial bank. So that the commercial banks are regularly using the agents to onboard APY customers. There is a feedback also from the industry that the fees is rather less, but I think everyone will agree that it is a social security scheme. So we have to sort of balance the needs of the people, the affordability of the product, vis-a-vis the fees that can be charged by the retirement advisors or the POPs or agents. So as of now, we have very less interest from the MFIs, but I agree with you, sir, that there is a felt need for MFIs engaging more and more as agents of commercial banks, because ultimately it's the well-being, economic well-being of the subscribers or the pensioners or the creditors. It's ultimately one and the same, and therefore that is something which needs to be addressed.
I had something I'd like to raise. Everybody says that banks, MFIs, everybody should push the insurance policies for the people. And it's like, but the regulator at the time of inspection, they say that these people are engaged in cross-selling of insurance products and they are not doing anything great to the customer, and I think they are putting a penalty sometimes to these people. So now, this is the biggest trouble right now, because we have a dichotomy. Because at one level, the government of India says that every citizen of the country should be covered under the every APY, because whichever doesn't have the key. And as she was telling that now 18 years, 26 years, or maybe any kind of, because now many people are willing to do. But the thing is, ultimately who got the reach? One is the banks have got the reach to to certain extent, because actually bank branch managers are not totally confined to the system, because so much of a business they are doing only on the computer, actually they are not going out of the branch. Now the one who is going out of the branch is either the banking correspondent or the MFI food soldier. Now once they start selling these products, actually it is being taken as somebody is doing some kind of a coercive action to sell them the products. And though the commission is whether big or small anything, but thing is this regulator writing a remark generally is giving jitters to the people. Do the thing. So I feel that the penetration is important. 4% is minuscule, because now when you are having so much and as the economy is growing to such a level of $40 trillion as what everybody talks by 2047, and your population is going to such kind of a thing, and having only few people having insurance cover, rest of them having absolutely no cover, is a kind of a crime actually in the nation. We should really push it that everybody should have some kind of a social security. If something happens to them, whether it is accident, death, or any kind of a loss of livelihood, the survivors have to get something out of it. That means actually it has to be pushed to a great extent. So now this kind of a thing, there is interlocution should happen between the government and the regulator, because two regulators are there, as to really how to harmonize. Because actually we were talking earlier harmonization of interest. So that is harmonizing, pushing this kind of insurance policies to the lowest level. Otherwise, actually, these people are not aware as to really what exactly this policy is, and somebody is trying to sell it. So now that is what. So now we should really make as a kind of a policy that the regulator has to come out with a thing. Actually, this is not tantamount to the cross-selling. It is giving the penetration to the most needed product in the country. Then I think it's
I just want to top this up. So more from, instead of the regulator, it's more from the ministries, the owners who are actually driving this. So just to kind of supplement what Dr. Chintala said, the product that which we were talking about, the Viva Mistar, which is going to be launched by the insurance regulator, that is actually for women. It is expected to be sold by women. So we are expected to make them Bima Vahaks, like we were talking about insurance, Bima Didis, we were talking about Lakpati Didis. So that is one cue that the regulator has taken from the industry. And the Bima Vahaks are expected to be the change agents. And this is where we will actually see the role of MFIs coming in. Because not only will they actually start creating awareness for insurance, they would also start creating employment for these women on ground. When they actually go across educating in the community, whether it's a JLG model or it's an SHG model, whichever way it is, that will start really making the change at the grassroots level, and this is certainly going to happen, like you were mentioning.
Thank you. It's a wonderful panel. I can go on asking questions, they'll answer, but I think time is a constraint. But I want to give an opportunity to ask one question if you have. I know we'll have a lot of questions. You have been very patient. It's almost lunchtime, but I still want to have. If somebody has a question, I don't want. Anybody has a question, or it's been all so clear that you don't have a question. Something with that. Okay, there's one hand, and that's only one question. Can you set the mic? The question is not to the moderator. Moderator is not supposed to answer. Okay, right.
My name is Anurag, and my question is to Mukul sir. Sir, we are talking about microfinance industry. So microfinance, I believe, will anyways that they'll recover because still the ticket size is under control. So the borrow level ticket size is 1.5 lakh, 1 lakh at that level. But do you have? I just want to have your views on the affordable housing industry because that is where if the borrower has affordable housing loan. And we also don't know the level of enforcement of security in the affordable housing loan. So if that is, and we are also seeing that the rates of those loans are also close to 15-20%. So what is your view on that?
Yeah.
has been our experience in Cashpor that part of the income generating loans sometimes are diverted. If borrowers do not have access to affordable housing loans, so they are diverted and used, sometimes 20-30% of that, sometimes full loans. This has been ongoing phenomenon since last many years, and that is why affordable housing loan has been catching up. And the problem is that microfinance raised their funds, particularly NBFC MFIs or MFIs like us, they raise funds from the banks, okay, and most of the loans which is provided by the banks are for income generating purposes generally. So we do not have funds for actually creating an affordable housing loan product. Okay. Though under the new regulation, the microfinance has been defined by the RBI as a loan being given to a household with annual household income of 3 lakh rupees for different purposes. It has not been specified that it would be only for income generating. That actually opens up the window, but it has to be supported by the banks, financial institutions who are supplying funds to MFIs. And my sense is that roughly 15-20%, because what happens in India, in rural India, you have marriages taking place every third month or fourth month, okay? And the kids grow, they get married, and there is one room which is required by poor household to be built for the new couple. And so there is a constant requirement of affordable housing for construction of an additional room or upgrading of the houses. And it has a big potential. So I see this as a lot of positivity. Okay. And this is a need which has to be catered to by MFIs, banks and financial institutions together by bringing about intervention in this area also. Thanks.
Thank you, Mukul. I think we are running out of time. Wonderful audience has stayed for so long. Wonderful panel. Thanks to Sa-Dhan for giving me this opportunity to moderate this panel and on an interesting subject. I want to end with one end line. I think all this points to one important role for the organizer of this event, which is Sa-Dhan as an SRO. I think the new changes, the regulatory framework, is only enhancing and increasing the role of an SRO as the first port of call to prevent deviations, and so that you can avoid regulatory interventions. So I think no better organization to have organized this event, and thanks for that. And again, my advice to you or suggestion to you: be active, prevent the problem rather than it escalating and becoming a larger problem for ecosystem itself. Thank you very much.
For your wise advice for us. Now I will request Mr. Ajay Kapoor, board member of Sa-Dhan and retired MD of SIDBI, to felicitate our esteemed speakers. thank you our eminent panelists for a very insightful session. Now we will break for lunch. Our next session will start at 2:30 in the main hall, and the topic of the next session is Microfinance 2034.